Joining me now with the names he thinks are poised to outperform, Bryan Spillane, a Staples analyst at BofA Securities. Bryan, welcome. I think of potato chips every time I see you.
Hey, Kelly, good to see you.
I've been following. The St. Louis Fred actually keeps this price series. We're down to $6.25. You know, people around the country send me the cost of chips in the aisles where they are shopping.
Walmart had them on sale all summer and they flew off the shelf.
Indeed. We're down to $2 in some places. And I think that our discussion is emblematic of kind of the dynamics within consumer staples. Yes, we have rate cuts, but we also have these big questions about, which way prices are going and what's happening with the consumer. So you come down on this rather positively, but in select areas. What are they?
Yeah, so what we did was we looked at performance in rate cuts that were associated with soft landing specifically, so not just generically rate cuts. And, the first conclusion was across consumer staples and the subsectors, the stocks just go up. Doesn't mean they outperform the market, but they in that 90-day period they go up. Then we tried to look at stocks that, relative performers, one relative to the other. And, we selected stocks where the companies have actually, or the stocks have been on the market for a long time. So we can go back to the history that we did. And so, what it uncovered was if you're in household product and personal care, Procter & Gamble outperforms Colgate. If you're looking at soft drinks, Pepsi has outperformed Coke. If you're looking at packaged food, Campbell's has outperformed Smucker's. Hershey has also been an outperformer, and even in beverage alcohol, Brown-Forman, who makes Jack Daniels, has outperformed Molson Coors. And so, I think when you look at that, I think some of it is these outperformers are generally high quality companies, stable dividend players, and I think if you're just purely looking at these stocks as bond proxies or as a place to go for yield as rates are coming down, it intuitively makes sense that, these are the stocks that you'd look at.
Yeah, and I'm a little curious why we see, certain names outperform others on a consistent basis. But my larger question would be, does history apply in this case? As so many things in the pandemic have kind of flown in the face of past business cycles, if we're going through a period of price adjustment, a disinflationary one, does that mean staples are less likely to perform well?
Yeah, Kelly, it's a great question. And maybe if we separate like fundamental drivers from the macro drivers, look, if interest rates come down and consumers have more purchasing power, given what's happened in our sector, especially in the more discretionary impulse channels, actually like earnings performance, sales should actually benefit, right? And, we talked about potato chips. I mean, one of the things that Frito has really struggled with has been the traffic in the convenience and gas channel, that impulse channel. So fundamentally, it actually should mean a bit of positive revision or at least support, right, for sales and earnings growth. If we step back, though, and just look again at the macro, I think a lot of this is going to be dependent upon whether or not we get to a point where the dividend yields in these stocks are attractive or more attractive than bonds. And that part of it, I think the process may have already begun. You can see the performance, especially in like the tobacco stocks over the summer.
Absolutely.
And I think some of that was this anticipation.
Yeah, Carter Worth was calling out tobacco names when they were doing. Real quickly, what yields are we talking about typically in some of these names? Do you think that's the differentiator?
Right. I think, we're talking about dividend yields, that are historically in the 3 to 4% range. As we've got a few in our group, like Molson Coors, for instance, that's way above that because the valuation's depressed. Yield a differentiator. I think the other thing is maybe the dividend growth and the consistency of the dividend also play a role. But ultimately, the yield is just a function of the stock price, and the stocks ought to, kind of level out at the yield.